Hello, this is Dale. It is mid-March 2022, and it's time for me to release my much anticipated list of financially strong stocks for this year. With this video, I'm going to be talking about trading credit spreads using the list. First, I'm going to go over the list, then I'm going to show you how you can use credit spreads to really multiply your returns with a conservative trading strategy. Again, my name is Dale Brethauer. I've been trading for a long time, a hedge fund manager, and what I'm most proud of is being the founder of www.optionsinfinity.com, which I believe is the very best credit spread education website available today. Not only do I teach people how to do that, but when I see a trade in the financially strongs or some of the big boys like Amazon, Google, I will send out alerts and show you exactly how I'm putting on the trade. Financially strong stocks, I first realized this many years ago. They outperform the market, and this makes a lot of sense because financially strong stocks, what I do is I pick out the very best that have the best cash from operations. The corporations that have the most cash have the most options to grow the business. And it's these stocks that I follow. It's usually a market basket of about 20 to 25. It's a small market basket. I love these because, you know, not only do they outperform the market, but the bigger they are, the harder they fall. So it's the magnitude of the moves, and this is beautiful for credit spreads. I'm going to be going over the list, then I'm going to be talking about how to use credit spreads to multiply your returns. This is a chart from bigcharts.com, and what I did is the black line is the S&P excuse me 500 normalized, and then I put in some financially strong stocks compared to the S&P, and this is over the last 10 years. You can see here's Amazon, which has outperformed the market by 1,500%. That's huge. That's a huge performance versus the market. Then you've got things like Abbott Labs. You've got things like Home Depot, Apple, and then we've got Google. So this is just an example of some of the financially strong stocks. They're in the list for this year. Google, Amazon, and Apple have been in for quite a while. Apple fell out for a couple years, but they've come back strong. So this is how they outperform the market. How do I pick these financially strong stocks? Well, the first thing I do is I look at the 10 most profitable market sectors, and I use the heat map to do that. I also use some information from yahoo.com. And once I've got the 10 most profitable market sectors, I go within those market sectors to find the companies that have a positive trend from cash from operations for the last 4 to 5 years. I don't want to fly, a flyer in there. I want something that is financially strong and has been for a while. And I use the data from WSJ Markets. And like I mentioned earlier, from this, I usually get a list of about 20 to 25 stocks. This is a small but very powerful market basket. It's not all of those stocks in there that I follow. I usually pick out the stocks that are trading for like $150 per share and above, because you don't want to get too inexpensive on your stock because the credit is not as good. So I kind of focus on the big ones. These are the 10 most powerful market sectors for last year. And once I have those, what I want to do is I want to look for companies within those market sectors that have good cash from operations. Well, let me just show you for a second. The financial statements start out in the income statement with their revenue minus the expenses minus the depreciation. Okay, this is an allotment the government gives corporations so that they don't have to pay tax on their reinvestment. In other words, it's not, they have to pay tax on it, but they get a certain percent deducted from their revenues in before they pay taxes. But this is money they actually have made. And what's interesting is once you pay your taxes, you get net income. This is what people focus on with the earnings per share in the net income. And this is what is released every quarter, and people pretty focused on that. Well, the market doesn't really care much about that because that's already been discounted. What they care about is the forward guidance that the CEOs give. But anyhow, what we want to do is take that net income and we continue on the statement of cash flow, because this depreciation, which was taken out so you didn't have to pay taxes on it, was money that was actually made, so it's added back in. Then you have any changes in working capital, and this gives you cash from operation. This is all the money that the corporation has made. And what I'm looking for is corporations that have shown a positive trend in the last 4 to 5 years. These are the companies that have the most money, the most options to do what they want to do. Now, this is just a chart from WSJ Markets. This is Apple, and you can see how Apple is, it was kind of flat in here, but then it's kind of taken off. And it's just a quick view to see that, yes, this indeed is a positively trending cash from operations. That's the kind of corporation that I want. This is the 2022 financially strong stocks list. That's 25 of them. The ones that I have in red are new to the list this year. AutoZone, Eli Lilly, ServiceNow, Qualcomm, Target, and United Rentals. ServiceNow, I don't follow that too much because the share price is only about $40 to $50, and you don't get very good credit on that. But the other ones are very, very good. You can do a couple things. You can either get to this list and write it down, or you can take a screenshot. Or what I use is the snippet tool. It's a free tool on the website, on the web, and you can just use snippet and cut this out, and you've got your list for 2022. I do this every year right around this time. The average profit in 2021 of the financially strong stocks by just buying was 47.5% average. Now, the market itself returned 26.9%, and that was a good return. But the financially strong stocks, even though the market had a strong year, the financially strong stocks outperformed that. And of course, past performance is no guarantee of future results. However, I've been following financially strong stocks for many years, and they outperform the market year after year after year. Now, the profit trading vertical credit spreads now totals 395% of margin versus that 47.5% for the stock return. It's a conservative way of trading. It's a profitable way of trading. This is, I focus my trading just using credit spreads. And this is what I teach on my website. This gives you an example of a bull put. You can see that the bull put, what we do is we come down here and we sell one strike price, and then we buy one further out of the money. And this then is a credit spread. Now, the beauty of credit spreads is as long as the market goes up, you make money. It can go sideways, you make money, or as long as it doesn't drop below this spread, you make money. Versus a straight call where you not only have to have the right direction, but it has to do it quickly. Because credit spreads actually use the theta decay to your favor. So we're actually selling. We're selling this put, and then we're buying one further out for protection. Now, what I use is just 4 powerful trading tools: the regression channel, measured moves, Fibonacci extensions, and the 5 and the 8-day exponential moving average. And just by using, I like to keep the strategy simple. I'll teach you exactly how to use those. And it's a repeatable strategy. It's easy to execute the strategy. This is a bear call. On the bear call, you can see that this is going down. And with a bear call, here you're selling an out of the money option, and then you're buying one a little further out of the money. This is interesting because this is really insurance. A lot of people look at the credit you can get by selling and say, why don't I just sell this naked? Well, selling it naked is going to require, the floor trader is going to require a lot of margin, and you actually get a better return on margin when you put in this for protection. This is my return on margin from 2019 up until recently. Actually, we had a little bit of drop here recently with one, the Omicron scare, 2, Russia invading Ukraine, and 3, then of course you got the FOMC raising interest rates and so forth. So we've had a little bit of a drop here. We're now starting to come back from that. This is not, you have to embrace losers. We have losers, we have losing streaks, but in the long run, you're looking at a positive equity curve, and that's the kind of curve you want to bring in consistent profits. The strategy I just disclosed to you has a positive expectation, as I showed. However, to become a real successful trader, it really requires a mentor. I am a mentor. I've been doing this publicly, I've been doing this for 10 years. I love to show people how to be successful in the marketplace. And it's not an easy place to make money. And I've come up with a strategy that's relatively simple. It's easy. It's easy to learn. It's not necessarily easy to master. And that's why what I'm doing is I'm offering right now, if you go to www.optionsinfinity.com, if you become a member for 3 months, I'm going to give you the 4th month free. Once again, it's an easy strategy to learn. It takes time to master that. I want people to master this strategy. That's why, if you stick around for 3 months, I'm going to give you that 4th month for free. Now, I'm probably not going to be doing this for very much longer. I'm getting to close to the end of my career. And I'd like to make this available to everybody, because this is a strategy where you can consistently make money in the stock market. I hope everybody takes advantage of it. And thank you for listening to this video. Bye-bye now.